what are you doing in the markets right now? The markets are crazy. The stock market is going up and down. Crypto market is going down. It's definitely going down. But what are you doing in the markets? Are you sitting on the sidelines? Are you dollar cost averaging down? Let me know what you guys are doing in the markets. In this episode of the podcast, I'm going to share with you guys what I'm doing. And we're going to go over a little bit of information of where we think the stock market is headed in the near future. All right. So let's get right into it. What's up, guys? It's your boy Ty, and I appreciate you guys stopping by to check me out on the podcast, wherever you're catching this at. And you guys know we like to talk about stocks, finances, motivation, inspiration, success, all of that, because it's all about making sure you are aware of the different avenues to get a piece of the pie. And I do think having these money talks, these conversations about money, finance, motivation, all of that, it can actually benefit both you and me and the others around us. The more we have conversations about wealth, finance, and things of that nature, the better we're going to become. Consistency, it's just like training your mind or training for the Olympics. You got to keep doing things over and over and over and practicing and keep seeing things from different angles and honing your skills. And that's what this podcast is all about, making sure that we sharing information, sharing tips, so we all can get better as a team. I do think conversations like this are needed. And no, I'm not a financial advisor. If you need financial advice, make sure you go seek out financial advice. I'm just a guy up here sharing my experience in the market and trying to get a piece of the pie, and want you guys to get a piece of the pie too. All right. And today we're going to be talking about what I'm doing in the markets. And you guys can let me know if you can relate. Let me know what you're doing, but let me know if you can relate. First off, we're going to start by checking out an article by The Motley Fool. And I like The Motley Fool. I am subscribed to The Motley Fool. You guys can check out The Motley Fool too by checking out my website. I got a link to The Motley Fool, and you can get a discount for signing up to The Motley Fool with my website. And I also have other things up there too that you might be interested in. But I like The Motley Fool because to me it's good, especially in times like this when the markets are going crazy, to have a little bit of guidance while you invest, or maybe not even guidance, reassurance while you invest. So I use The Motley Fool, and I also use Trade Ideas when I want to try to flip some money real quick. I use Trade Ideas platform and their stock tips to see if I want to dive in a stock that is low and try to make that bad back. So check them all out on my website. All right. And you also can sign up for my newsletter. I also give tips and things that can make you some money. I send you guys things like that, and it's all if you sign up for the newsletter, like I said, it's all good information. But now let's get to this article about The Motley Fool. So this article I'm going over, it came out November 27th. That's today. And it is titled, "One of the World's Richest Investors Just Sounded a Big Time Warning for Wall Street." And it's just basically going over how one investor of a big hedge fund basically is saying the market's going to keep going down. All right. And some of the headlines: one billionaire money manager believes more pain lies ahead for the stock market. I'm paraphrasing this article by The Motley Fool. Again, you can check The Motley Fool out. Over the past 6 weeks, all three of the indexes have been going up. In fact, the Dow Jones is now considerably closer to an all-time high than a fresh year-to-date low. But despite of this bounce, one billionaire money manager is sounding a warning for Wall Street. This highly successful billionaire's actions speak louder than words. Approximately 2 weeks ago, on November 14th, money managers and wealthy individuals with more than 100 million in assets under management were required to file a Form 13F with the Securities and Exchange Commission. A 13F provides a snapshot of what the brightest minds on Wall Street held in their portfolios at the end of the most recent quarter. The standout 13F of the third quarter wasn't Berkshire Hathaway's Warren Buffett. Rather, it was billionaire hedge fund manager David Tepper of Appaloosa Management. Tepper owns the NFL's Carolina Panthers franchise and is estimated to be worth $18.5 billion, making him one of the world's richest people. So basically, it's saying this guy, he is basically saying the market is going down, and they had to show with their filing what they were doing in their portfolio. And he basically says, yeah, it's probably going down. A multitude of metrics suggest the stock market will head lower. Tepper's very clear warning for Wall Street jives with a number of metrics and historical data points that would seem to suggest the broader markets have yet to hit the bottom. Alright, so that's an article by the Motley Fool, and I found it interesting, so I thought I'd share it with you guys. So basically, it's saying that they think the market will probably go down lower. The market has been going up, down. Crypto market, man, you guys have been watching the crypto market. Crypto is crazy. And one thing about the crypto market, I bought into Bitcoin back when it was, I think it was a year or two ago, and it was like at, I want to say like 16,000, and then of course you guys know it went all the way like to 40 something, and I was like, yeah, I cashed out early on my Bitcoin, but I'm like, dang, it's back at that same point. Bitcoin is down. So crypto is crazy, and the stock market is doing the same thing, up and down. Me personally, I've been sitting on the sidelines for real, especially during this holiday time. The holiday time is when I have to come out of pocket for a lot of things. It's holiday time, you gotta get gifts for people, gifts for the less fortunate, things like that. And I like to go ahead and just use my money wisely. I don't try to be saving or trying to put too much into the stock market during the holiday times just because it's needed for holiday time things. But I do still put a small amount, regardless of what the market is doing. I put a small amount in my stock portfolio every week and every other week for my retirement account. And what I've been doing more so is putting more money into my retirement account, especially how the market is up and down. And I've been investing into REITs so I can get those dividends in my retirement account. So I do have a non-retirement account, but I haven't been putting as much money into the non-retirement account just because the markets have been up and down. You don't know where the bottom's at. I have what I have in it, but I haven't been putting more in it. I'd rather put them in my retirement account where I can get those dividends and be a little more safe. But I still have a little bit of crypto. No, I got a good amount of crypto. I still got a good amount of crypto and stocks in those non-retirement accounts. But right now, how the market has been going, I've been mainly putting the majority of my money into my retirement accounts and stacking that up. So speaking of that, one of the stocks, I'm gonna give you guys one of the stocks that I like, and this isn't financial advice, but one of the stocks that is pretty big in my retirement portfolio is stock ticker symbol EPRT, and that's Essential Properties Realty Trust. Right now, currently, according to Google, at the time of this recording, is sitting around $23.15 per share, and it's a REIT. Year to year, right now, it has a positive revenue. It has a revenue of $70.24 million, and that is positive for the year to year. And it's positive 18% for the revenue. Net income is positive, and it's $36.43 million, and that is a increase of 32.43% increase. And net profit margin is positive. Also is at 51.86%, and diluted EPS is at 0.26, and that's also positive at 13.04%. All right, and this company is doing great, if you ask me. I've been investing into it for a while. So for the year, it's down negative 20.14%, and it's down $5.84 for the year. For year to date, for over the last 5 years, and that's the same as its max, because it came out, it IPO'd in 2018. So I'm just going to go to the max. The all time right now is up 70.22%, which is pretty good. And I like this REIT because it was relatively new. It has still paid out a dividend throughout COVID and all, and its dividend yield currently is 4.67%. And I like this stock. I like this stock a lot because, again, it's a relatively new REIT. It was strong because it didn't falter during COVID. So I still dial into this one. And the market cap for this is $3.30 billion. It's still a small cap stock, but yeah, I like it. I think I can get the best bang for my buck by increasing my percentage, my holdings in this company. And it's one of many stocks I have in my retirement portfolio, and I keep dialing into this stock because it pays a decent dividend. And it's a REIT. Of course, it's real estate, but right now I'm just gonna give you guys that one. And again, that's ticker symbol EPRT. Is one of my favorite REITs, and it's one of my favorite stocks in my retirement portfolio. It's a little different than the steady old realties and things like that. I have that too, those type of income companies too, but this one is a small cap. I think it has legs to grow. Make sure you check it out. Make sure you check everything out. Whenever someone tells you a stock or gives you a stock, you still always go and do your research. That's the whole point of having the talks, right? Make sure we bounce ideas off each other. All right, so that's one of the stocks that I'm into. Another stock that I got from one of my sources. I can't get my source right, because then they might come after me. But one of my sources is another company. This one is completely different from a REIT. This one is a little bit more on the risky side. And hold on, backtrack. If you don't know what a REIT is, a real estate investment trust is a company that goes out and invests into real estate. And they invest into real estate like places that Walmarts are built. They own the land that the Walmart is sitting on. They own the land that the McDonald's is sitting on, that the Popeyes is sitting on, the 7-Eleven is sitting on. They own commercial real estate, and they go public so they can keep going out there and buy more commercial real estate with the money from the investors. So that's what EPRT is. And again, that's Essential Properties Realty Trust. And that is what a REIT is, if you didn't know. But I know you guys knew that, but I still gotta say what it is, just in case I have anyone new here. Again, so the other company I have been investing into, I haven't been investing into this as much as my REIT, but I have been, like I said, I put a little bit in the stock market regardless of what's going on. And this is Luminar Technologies. This ticker symbol is LAZR. Luminar Technologies. Luminar, however you want to say it. Luminar Technologies. And Luminar is an American technology company that develops vision-based LiDAR and machine perceptive technologies, primarily for self-driving cars. So self-driving cars, that's a technology for the future. I still believe in that technology will kick off, and not just me. I have a bunch of different sources that help me verify that it will happen. And that's another thing that, again, I like to say, like the Motley Fools and other stock advisors, they help you have a little more confidence in the things that you already think. So I use the Motley Fool, and I use other stock advisors too. If you guys have been watching my channel or anything, you probably know what other stock advisors I use. But these stock advisors, they like to talk about certain companies. All of them talk about the same companies. That's why I kind of use them all to see what's what. But Luminar Technologies, check them out. I already had my eyes on them, and it's just good that I see other people talking about this company too. Right now, we're talking about numbers right now. It is down for the year. Sheesh, it's down negative 54% for the year. 5 years is down. It has not even been out that long. It came out in 2019, and all time is negative 21%, which is good. It's good if it's a technology that will boom, because that's pretty low. Like I said, the market could go lower, but either way, it's pretty low. And long as I'm buying lower than I put in, I buy. So I don't just put money in anymore. I've been doing, because the market's been up and down, whenever I see a company like this, I only buy if it's lower than my initial buy, or the same. If it's the same or lower than my initial buy, I'm not buying anything that's higher than my initial buy price. That makes sense? So this dollar cost averaging, I just buy lower, so it is, I buy to lower my average. I don't buy just to buy anymore, because I've learned that's a waste of time for me, because the markets have been going down. If you just wait and set your limit buys at that price or lower, you can win every time. So in my mind is, the way I think about it is, if I put that money in at that price, I was okay with whatever happened with that initial price. If I keep buying and that price is higher, that's not my initial price. I probably would have never bought that stock at that price. You get what I'm saying? So that's what I like to do. That's what I've been doing. And yeah, that's what I've been doing so far. Crypto. If you want to talk about crypto, I have been buying a little bit of crypto here or there, but it hasn't been much, because I already got a lot in crypto, and crypto has been gave me a black eye. I'm talking about a black eye. You guys can see because the markets for crypto is going down, and crypto has been beating me up. So I do the same with crypto, only buy at a lower price, but everything is a lower price now with how low crypto has dipped down. So yeah, that's what I've been doing. Like I said, if I'm buying crypto, I'm buying something like $20 on this day, $25 on this day, $20 on this day, 25. I'm not buying a big amount of crypto right now at this moment, just because the market could go lower. If I see something that go crazy low, yeah, I might get ambitious and put 50, but I ain't putting no more thousands because I already have thousands in crypto. I will keep buying, but I'm not buying nothing crazy. I'm not gonna lose my house and home on crypto if it falls through, because crypto is still a big risk. You gotta understand that crypto can boom. I still think it will boom, but it still holds risk. So I didn't take my money out of my crypto. I still have my crypto, but I'm cautious on how much more I'm willing to risk on crypto. And that's what it's all about, knowing your risk tolerance level. So my risk tolerance level told me fall back a little bit, only put a little bit here, a little bit there, and put my money more so in dividend stocks because they are growing and I receive dividends from them, and I can't go wrong with my dividend stocks so far because I've been picking dividend stocks that consistently give a payout. Even when the turmoil happened with COVID, some people stopped paying dividends. The companies that I buy, they consistently gave a payout. So those are the type of companies that I go for, a little more safe. And that again is what I've been doing. So one of my subscribers on YouTube, he was saying, man, when you gonna do the stock picks again? If you guys have noticed, if you have been riding with me for a while, I fell back on the stock picks just because when I was doing them, TikTok started to block me. They started to block my account. YouTube disowned me for a little while. Thank you, YouTube. I'm back in action. But they demonetized me for the way I was doing my stock picks. So yeah, I kind of fell back. So if you have come to my channel because you like the fast, quick stock picks, I apologize. I'm working on a different way of doing that. But right now, it's 2 different stocks that I'm investing into, and that's what I'm doing. If you want to see those fast stock picks, I probably won't do them again like that. If you guys like this type of video, I will continue to do these type of videos, but I gotta see a good rapport for me to post this on YouTube. Of course, I'm gonna keep posting it on my podcast. Make sure y'all check me out on Spotify, but if you guys want to see more of this on YouTube, make sure you let it be known. All right, so that wraps it up. I appreciate y'all checking me out on the podcast, and till next time, peace.